afternoon. How are you all doing? How is everybody this afternoon? Happy CAD interest rate day. Going to be a big one. Well, probably going to be a big one. Fingers crossed it's going to be a big one. Something's going to move anyway. So yeah, CAD interest rates coming out in under 15 minutes. Afternoon, Steve, David. Good morning, Goat. Thank you. Who else is there? FTNet, Monkey, Mark, Jeremy, Jux, Amy, Brian, XR, update.news, Virginia, Hamza. How we doing? Afternoon, Neo. So basically, this morning we've had the GDP for Australian dollar. That came out as a miss. Not gone negative, but not positive. Well, not as forecast. So it's a slight miss on forecast. Not really any impact today on the Australian dollar. As you can see, that was the news. So undone the news. We're back to where we were. I'm not surprised by that because obviously the New Zealand interest rates are going to affect the Australian dollar. So I'm not surprised they haven't done a lot with it today. So nothing particularly exciting happened there. We've had the non-farm employment change came out as a negative this afternoon. Not a great deal of movement on that, as you can see. Nada. Basically, again, same thing. We're waiting for these interest rates. The market's not going to dump much into the market really before these rates come out. The yen, however, has completely undone yesterday's move. So total V-shaped recovery on yesterday. So yesterday, obviously, we had huge ADRs. I think we had 225 ADRs on a lot of yens yesterday. We've done 175 ADR reversals on them. So as you can see, yesterday was not a move at the moment, but there is potential that this is a move that's going to continue. So we'll have to wait and see what happens with this. As I said yesterday, there's a good possibility that move that I said yesterday was a pullback on a long. The market hasn't got any reason to be strong on this yen at all. So that was a good opportunity to get into longs if you wanted to get into them. But if you were in shorts, you probably got out yesterday on all of them. But as I said yesterday, no idea what's going on with this thing at the moment. Absolutely clueless. Has no direction. It's just no idea. So as I said, I'm not trading the yen at the moment because I have no idea where it's going. I don't know if this is a pullback long or whether this is a breakout short. I've no idea what the fundamentals are going to be. I don't think the market knows what the fundamentals are. So, yeah, your guess is as good as mine with this. But that's a hell of a breakout we had yesterday. So either this is a brilliant short or you've just missed your entry on the long. Don't know. So wait and see. But I'm not really interested in it. It's Swiss yen just made new highs, look. So that big drop we had yesterday, it's just broken out last month's high. And CAD obviously is going to be affected this afternoon. So very weird movement there. So your ADRs today, Aussie yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand yen. Bit of a trend forming, isn't there? US yen. So it's all yen today. Again, yesterday, the only thing that moved was the yen. Today, the only thing that's moved is the yen. The yen's moving. But where it's going, I've no idea. So RSIs today, very little because obviously all the RSI extensions we had yesterday, most of those were formed off of yen RSI extensions. They've all undone. So if you took any yesterday, you're out in profit. So there's nothing else really to look at today. Aussie New Zealand still collapsed to the downside. This thing can't recover at all, which is annoying because I got out there just as it collapsed. But as I said, there's no real reason why we shouldn't be return to origin move on this. Fundamentally, there's no reason for that. Therefore, might as well just come back down. It is just a range. Yeah. So we're just inside this range. So back down to there as far as I'm concerned. whether I long it or not from there, we'll have to wait and see what the fundamentals are, because we don't know what's happening with the Aussie or the New Zealand from a interest rate perspective at all at the moment. So we'll have to wait and see with those. Overnight news, nothing particularly exciting overnight. A few more bits about Hamas and Israel, but nothing particularly exciting. This was the main... I'm surprised the market didn't react to this, but this was the main news overnight. Royal Bank of Australia, inflation stickiness may warrant a hike. Hike, not drop. So the first central bank to indicate that they may not be done with interest rate rises yet. And obviously they are at 4.35. They're lagging way behind the New Zealand. And this is coming down at a fairly decent rate. So to be fair, if it carries on as the rest of the world has, this will be down at 2% within the next 3-4 months. So they won't have anything to worry about. But the next CPI number on the Aussie, if it comes out as a bounce or it hasn't dropped, there's a possibility of a rate hike there, which makes it bullish. So that Aussie New Zealand we just looked at would be a buy. So we'll wait and see, but at the moment, nothing on that. No movement off of the news overnight. There's your GDP figures coming out ever so slightly under forecast, but it's 0.1%, so nothing exciting. And nothing else on the news this morning at all. Dead. We had PMIs for Germany coming out above forecast. Which isn't going to put any pressure on the rate drop tomorrow. But UK PMIs came out as well, pretty much forecast, as you can see. Services hit. The composite was 0.2 above, so nothing interesting there. Dollar not moving. There's your non-farm. Fed rate cuts by 50% in 2024, 68 of 8. Yeah, so still a 50-50 shot as to whether we get a rate cut this year. So nothing new. So a lot of talk, no action, as usual. Afternoon, Philip, Callum. David, question. I have the VPS you recommended on the site. The EA is set up on the VPS, taking additional trades after 0.1 ADR. On my main chart, I have the EA set up for button trade only. Additional trade was set up for 0.5 ADR. And on my main chart, I see the next short line from 0.5 from the last entry. So just make sure that the settings you have in here are identical to the ones you are running on the VPS, basically. So you set this exactly the same set file on the machine you're looking at as you're running on your VPS, except you just change that to true. That's it. Then everything else will just work exactly the same. So what I'm using here is a replica of what I'm using on my VPS. It's just got that set to true, which means it disables all auto trading functionality, and the only thing that I can do is use these. That's it. And if you don't want RSI and ADR fingers to show and all that sort of stuff, you can just turn those off. I've turned them off on here, but the inputs for everything are the same. What we do. Afternoon, Church. So I'm not going to go through all the pairs today. There's not a lot of point. It'll probably be fairly short stream once the news comes out, because today we've got obviously the Canadian rates coming out in the next 3 minutes. We've got PMIs this afternoon, services PMIs. So you are going to get an impacted move from that this afternoon. But I expect what will happen this afternoon is that will be either a spike and a retracement, or it won't move very much because the press conference hasn't come out until 3:30. So market's not going to do a lot of movement on that, I don't think, on the US dollar, because it's going to wait and see what the CAD forward guidance is before that happens. it may well move, but I suspect it will probably be after 3:30, or rather after 4 o'clock. So on this news, we will probably get a spike. Unless it comes out anything other than 4.75, in which case then it's just going to take off. But I suspect we'll probably get a fair spike off of this in one direction or the other, maybe a whipsaw. But at 4 o'clock, somewhere between 4 and 4:15, when that press conference is coming to a close, that's when the market will take all this into account, take that into account, and the move will generally start. So the CAD will probably take off, if it warrants taking off, sometime around 4 o'clock this afternoon or thereabouts. And then tomorrow we've got the euro rates coming out as a drop as well. So there's no point in looking at anything today, because the market is going to reposition itself this afternoon on US and CAD pairs, and it's going to reposition itself on everything tomorrow when the euro rate comes out, because this is quite an important one. So there's not much point in looking at everything today because it's going to go nuts. We'll watch US CAD. That'll give us an indication as to what's going on with the Canadian. And then it's just a case of waiting until tomorrow, really. But I just want to see what happens with this CAD this afternoon and see where it decides to go. What I might do actually is watch pound CAD's probably a better thing to watch, actually. Because it's going to have less impact from the US dollar, because the US dollar might well move and power up with the Canadian, assuming it goes. So we got gone. There we go. So you're kidding me. Look at that stop out. I didn't get anywhere near it. New Zealand dollar CAD ADR. So yeah, that is weak CAD as we expected. So Canadian dollar weakening off the back of that rate drop, which I assume is what we've got. Yeah, 4.75. So we have come down as expected. So don't forget, this is an expected result. This is why we shouldn't really get a huge, like 300 ADR or anything move off of this, because the market was expecting to receive that. It's priced that in already. So we know what we're getting. We got what we're getting. Thanks very much. What's next? So this is where the market will now decide what to do next once we get that press conference out of the way. So we probably find we get a wick up, as we have. Just a little bit of a stop out there on the drawdown control on pound CAD. But I wouldn't expect this, to take off. Quite possibly come back down again, but we'll see what happens in the next sort of 5 minutes or so. So US dollar rallying against the CAD, but as you can see, this is not, we haven't even hit ADR here yet. So you won't get a massive reaction to an expected result. This is the forecast result. We're expecting it. So this is just, I suspect, additional orders coming into the market. So they're adding to their short positions on the CAD. But we need to see what happens at 3:30. So we'll just watch this for 5 minutes to see where it goes. If you've got any other pairs you want to look at, let me know. Just watching my P&L on another screen. Nothing much else moving. Very little on that. So no movement on Aussie or Swiss. No movement on the yen. No movement on Aussie or New Zealand. Oh, sneeze, sorry. So yeah, tiny. Look at that reaction on the CAD Swiss. Look, absolutely minuscule. No movement. So we're waiting for the press conference this afternoon to decide where we're going to go with that. So we've got a little bit of extra movement on the euro. So there's a bit of strength coming in on euro. Pound US dollar, New Zealand dollar CAD. I've just been stopped out on my aggressives on that. Oh God, look at that. Not even got, look, stopped out. High. We didn't get there, Mr. Broker. Spread. Stopped. Love them. So yeah, New Zealand dollar CAD obviously up there. So basically, we're waiting to see what happens with the press conference. So that will unwind, or it will rally. If it rallies, I'm going to jump ship on a load more of this. This is not going well, this New Zealand CAD. I've got to get out of it. So been doing drawdown control, keeping on top of the drawdown on it. But if the Bank of Canada comes out and confirms further rate drops, it's just going to weaken. So it's probably just going to be one of those I'm going to take a loss on and have a hideous month again. Not a lot you can do with it. Wrong side of a rate change. And the problem with this particular trade is that there's no market structure. You cannot make money position trading without market structure. If the market flattens, there's nothing you can do. The whole premise of position trading is mean reversion on market structure moves. There is none. That you just have to take the loss. You just can't do it. I've seen so much of this over the last year, way more than ever in the last year, because this market is stuck. It's frozen. It will not move unless there is an interest rate change. So you get in, you get into drawdown, and you're stuck. So just a hideous situation at the moment with these markets being frozen like this. But if he's bearish this afternoon on the CAD, i.e. we say we're going to skip now, we've done our drop, we're going to skip next month, wait for CPI figures, they'll be doing that. Yeah, we'll get some rally coming into the Canadian. So that inflation figure on the Canadian is only coming down by 0.2. So this drop down to 4.75 now is assuming that we are going to continue that to 2%. If they come out and say in the press conference, there's your 0.25, will be driven by data, but it doesn't look like inflation is going to hit. It's a bit sticky, a little bit like what was said this morning for the Australian dollar. We may not be able to reduce interest rates next month. Going to power up. So, and especially if that CPI figure doesn't come out as a negative, then it will definitely power up. So, wait and see what happens on that one. But pound US dollar, not again, you know. 1, 2, 3, 15 days, 3 weeks, totally sideways. Can't do anything with it. Can't do anything with it. It's just 3 weeks sideways. So the fundamentals on this at the moment, just impossible with this US. The market is the main currency that drives everything, and the markets are scared to death of it at the minute because they do not know when to start a move on this. So pound, assuming we get the euro drop tomorrow, which we will, the pound will follow shortly after, probably July, August. We'll get that pound drop. So we'll start to see a bearish move into the pound. Whether or not the bulls are in charge of the US or not, we'll have to wait and see. But if they go really bearish on the US at the same time as they go bearish on the pound, that's what we're going to get. So it's more of a short than a long. But at the moment, it's not going anywhere, is it? Same as everything. We are just stuck. This market is stuck. There's nothing going on that we're used to from a market structure perspective at the moment. It's just stuck sideways. So not a lot we can do about it. But I'm short on this. I literally want an ADR down to get break even on it, which shouldn't be a problem. We've got obviously US news coming out this afternoon in 7 minutes. So if we get negative numbers again, if you look at the US news this week, manufacturing PMIs negative, jolts negative, non-farm negative. These PMIs come out negative. It's negative, bad for the US. But you look at what the US is doing on all of this negative news. It's doing nothing. Yeah, the market is not interested at the moment in the US. We've got too much going on with the CAD, the euro, and everything else. That we just saw going past on Financial Juice there, that article by, who is it by? ING, as to why we didn't see any downside on that negative news yesterday. You know, normally you would get a drop. We've had for ages while the interest rates are going up. Every piece of negative news, they flew down on the US. US is not dropping its interest rates. There's no reason to go short on the US, but there is also no reason to go long on the US at the moment either. So I suspect we'll get virtually nothing out of that this afternoon as well. We'll watch it and see if we get a move either way. But yeah, stuck. Not a pair, but the DAX. DAX, I'm out. So got hedged on the DAX this morning. Nice clean break this morning on the FTSE. Again, FTSE's been my friend for the last week. Literally, just easy, clean breaks, the FTSE at the moment. It's got loads of volume in it. The DAX this morning got hedged. So got out there, added and exited on this drop. So I'm out the DAX. Good day again today. Third good day in a row, actually. It's wins all round. So nice and easy today. Yeah. I don't trade DAX long term, if that's what you're asking. It's literally a scalping pair. Which is the EA you now use for H1M5? I'm using Position Trader EA, but use either. They both do the same thing, pretty much. Yeah, Position Trader EA is what I use, this one. So it trades, the Position Trader EA trades H1M5, well, trades RSI mean reversion, it trades ADR mean reversion. It's just, I've stripped out all the crap, yeah? All the stuff no one ever uses that made it really, really, really slow to test, really clunky, really complex. I've stripped all that crap out of it. It doesn't use market reversal alerts either. It uses moving average cross entry. It's very, 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 very simple. Keep it as simple as you can. Market reversal alerts is a fantastic indicator and a fantastic way of identifying structure breaks when the sellers or the buyers have taken control. Yeah. The trouble with that is sometimes the movement means you do not get a signal for half an ADR or more sometimes. With a simple MA cross, it's a lot quicker. And the other thing about using an MA cross is you can use any, and the whole idea behind the Position Trader EA, as it says up here, you can turn any trading strategy into a position trading strategy. Don't forget, position trading is a methodology. It's not a system. It's a way of getting into and out of market movement. So it allows you, using the buttons, to basically just take a trade with whatever strategy you want. If you want to use Bollinger Bands, CCI, MACD, 3 up days in a row, whatever you want to use as a strategy for an entry, you can use the buttons and then it will automatically take over and turn the whole thing into a position trade. Scale in, scale up, risk, do whatever you want. Do drawdown control, enter aggressive positions. That's everything we do, but just in a simpler way. That's it. That's inputs. That's a lot. You don't need any more than that. You literally do not need any more inputs than that. That's all I've ever used. When I built the EA, the Market Reversal Alerts EA, that is all I used. Yeah. And then I added tons of crap that everybody said, can it do this? Can it do that? I want this? I want that. Before you know it, it's got 100 inputs and takes 7 hours to do a 1 hour test in the strategy tester. So I've stripped out all the crap and just made it, enter. As I said, it's not about, trading is not about strategy. It's about managing risk and managing your trades and positions that you're in. Yeah. Why you press that button or that button is irrelevant. Yeah. When you press one of those buttons, the odds of your trade working are 50%. Always. It's either going to go up or it's going to go down. Fact. What makes you money is what you do after you've pressed that button. If the market goes your way, when you get out makes you money. If the market goes against you, how you scale in and manage that position is what makes you money. So that's what the position trader EA is all about. It's simplifying it. Stripping out the crap. Last week really did a doozy on Mr. Powell. I was getting worried. Yeah, he was getting a bit hairy, wasn't he? Have we just had that news? No, 1 minute 30. Okay. I was going to say, I was watching this, waiting for it to move, and it hasn't. New Zealand CAD 125 ADR. Still pushing. So Canadian dollar, pound CAD's dropping as well. Pumping, rather. So there we go. We've got 3/4 of an ADR of movement out of that interest rate. So virtually nothing at the moment. Wait until the press conference. Okay, so pound US. We've got 1 minute till the news on the US dollar. So we've got the PMIs coming out. Everything has been negative all week. So let's assume it's going to be a negative. But if it's a positive, hopefully we'll get a move on it, but we'll see. We'll be able to tell by which way this flies. A lot of movement just coming in on the euro pound for some reason. Big old spreads going in there on that for some reason. Spreads across the market at the moment. Okay, 5 seconds. Ooh, positive number for the US for a change. Wow. Actually, a positive number. Aussie New Zealand's just hit ADR? Or was it a positive number? Or was it a whipsaw? Look at that. Uh, 53.8 on a 51 forecast. So that's a nearly 3% hit. No wonder that moved so fast. That's a big number. So that's the first positive news we've had on the US this week. Market really trying to buy that US dollar, but not having much success. Down to the Canadian. So big whip down on the Canadian as well. Obviously, those two linked together. Oof, look at that! Completely that US news there completely undid that Canadian spike plus some. Shows you how weak that Canadian move is. The market's really not interested in what the interest rate is because it doesn't matter, does it? We know we're a forecast. We knew it was coming. We got it. Brilliant. Now what? That's what they're interested in. That was a shock, though, that US news. So let's see if they can sustain a move on the back of that US news. So we may well get an update on the US today. Finally, some positive news. Afternoon, Baggy. Afternoon, stroke morning, Franco. I'm awake, fighting to break even. Brutal day yesterday. Then your voice stopped trading in my head. I saved your prop account. Ah, there you go. Yes. Yesterday was just, I said yesterday, this move, there was no reason for that yesterday. It was a total overreaction. We are seeing this so much at the moment, so much overreaction to news. And again, V-shaped recovery. It's all we get. All we get. You get a big move and it's like, nah, that was an overreaction. You're not thinking about this. The market's not thinking, it's reacting at the moment. It's just, that's it. All you get all the time. Which doesn't help. Want stuff to move. Just want these interest rates to start a move off and start this market moving properly because it's just not able to get started at the moment. So I just want to see if that pound US moves, if we get that move starting. very weak reaction to that. Obviously, the initial reaction was a large order put in, but not seeing any follow through at the moment. So we'll see what happens. Hopefully, we get some follow through on that. Just watching my RSI2 account, just see if I can take any profit on anything, but I can't at the moment, which is annoying. I was testing Position Trader right now in Tester, and I was wondering why there is no settings about reversal patterns, because it's nothing to do with market reversal alerts. Go and watch the video on here. It's nothing to do with market reversal alert. The MRAE EA is the market reversal alerts EA. So the whole purpose of that is it trades market reversal alerts. Yeah, this is nothing to do with market reversal alerts at all. It is a position trading EA. Its whole purpose is to scale in and DCA into trades for you. How you get into those is up to you, but it will enter using reversals on moving averages. So this is I think that's a 9. Yeah, it's a 9. So that's a 9 EMA. So if you look at the reversal alert, yeah, there. So there's your odd pattern, that one, but there's your reversal alert. A moving average cross tells you the same thing to a certain extent, yeah, that market participants have changed direction. So in a accumulation, obviously, moving averages are useless, but so is a reversal alert. You won't get any signals in a reversal alert there, but you will get moving average signals. So with the position trader EA, what you'll find is in very strong moves against you, say you short the market and you get a very strong move against you like that, and then the market comes down hard the other way, you may not get a reversal alert until here, which means you miss all of that. And then by the time you get the reversal alert, it's too close to your original position and you won't get a second trade on. With the position trader EA, because it uses a moving average, it will get you in somewhere up there regardless, because the market has changed direction. This is the main difference between the position trader EA and the market reversal alerts EA. We're not waiting for confirmation of structure changing. We're just getting in because the sellers have onboarded. And quite often that's the right thing to do. Sometimes it's the wrong thing to do. But as with all indicators, sometimes that's the best thing to use. Sometimes it's not. Yeah, it's always a 50-50, yeah, at the end of the day. So, but because obviously I needed to put some kind of signal trigger in there, I decided to use an MA, because an MA cross is widely used in a multitude of strategies. So you can fine tune the moving average entry to be whichever MA you want it to be on the time period that it's trading on. So it will work with virtually any strategy. So if you wanted to simulate a bearish engulfing, for example, as your entry criteria, you'd use something like a 3 or a 5 MA and probably an EMA, because it would hug price tighter. If you wanted to wait for something which is more confirmation, you'd use a slower moving average like a 9 SMA or maybe even a 15 or something. So you can play around with the moving averages, but basically all it's doing is, when you cross below a moving average, it means that the people that were buying are not buying anymore. How tight you have that entry is totally up to you, but none of them are right. None of them are wrong. They're just different entries. You just want to get in after price has pushed against you when some people come on board that are on your side. So it's more versatile, basically, as far as I'm concerned. Silly question, but how do I reset the time on MT4 to New York time? You can't. It's your broker. The time is your broker's server time. It'll be UTC plus 2. Most brokers are UTC plus 2. The proper time, UK time. Not that silly New York time. We use UK time. You can't change it. That is your broker time. Why is that so high? I just realized my RSI suddenly was huge. Right, so we have got a move starting on the US. So the initial news spike has held, and ever such a slight retracement. Bears taking control again. We've got another 2 minutes on this candle. We haven't managed to break the low of that yet. But certainly they seem to be a little bit more bullish on the US on that news finally. But this you have to take with a pinch of salt, because in less than half an hour, Bank of Canada press conference is going to start, and there's going to be a shed load more movement coming in the CAD. And that will also affect the US dollar, because they will pull money out of or push money into the US dollar based on what they think the Canadian dollar is going to do as well. So I get the feeling you'll probably be back up here. And the same with these CAD pairs. Yeah. We've had the initial news spike. They've added to their positions. Now it's a case of hanging around and waiting for the news. So we probably won't make a lot more progress on this. And as you can see with most of these, yeah, I mean, if you look at ADR, Euro CAD just hit ADR, Pound CAD just hit ADR, New Zealand CAD, you managed to get 125 out of it. That's it. So very little movement on it. All about the news. We'll wait for the news and see what that does. But other than interest rates, is there anything yen can do to actually strengthen their currency? No idea. This is why I'm not trading this thing at the minute. I do not know what is going to drive this moving forward. Yeah. For 2 decades, they have not used interest rates. They have switched to interest rates, and they have stopped. I mean, the interest rates have had no power. They've had no impact, have they? So they had to intervene, which they've done before. And typically an intervention sends the market packing and everyone starts buying the yen again. In this case, it hasn't worked. And interest rates didn't work. So they changed interest rates. Yeah. They changed interest rates. It didn't work. Yeah. They told the market they can't push it any further. It didn't work. They intervened. It didn't work. I don't know. I want to buy it. I really want to buy it, everything against the yen, but I can't bring myself to do it because I know the power they have in liquidating overseas assets. However, they've said they're scaling back purchase of overseas assets, which is going to weaken the yen. I do not know what to do with this. And because if it wasn't so expensive to trade, I would probably take a chance on shorting it or longing it, to be honest. But because it's so expensive to trade, if I want to go short on this, it's going to cost too much money to hold. If you have to sit through that 4 weeks, yeah, that would cost you 20% in fees to hold the position of whatever drawdown you go into. It's just too expensive to trade. Long, not a problem. But do you want to long against something that can drive it down by 800% of its average daily range in 5 minutes? Too scary. Too unpredictable. We've got plenty of other assets we can trade out there without getting involved in this. And you've got every chance, it will work. But look, it's not working. Yeah. But equally, it's not going anywhere. Is it? There's the intervention. We haven't gone anywhere for 4 weeks after the largest cash injection into the yen in what, 10 years? That didn't work. I don't know. What's bankruptcy? I really don't know. No idea what's going to happen with it. Robert, thank you for the 150 CZKs. What is a CZK? Is that a Czech krona? I don't know what that is. Thank you very much. It's like £5. Thank you. I'm glad you answered that question. Thank you for the support. Yeah, thanks very much, Robert. Much appreciated. £5. That'll do. 150 Czech. I don't even think I've got that as a cross. Does anybody even trade that? Not big enough, I suppose, for brokers to support. One of the exotic pairs. The exotics are just impossible to trade. They've usually got spreads and commissions, which are too big to make them worth trading. So, pound US dollar in short, got fast 28 pip move. Good man, Franco. That was probably the right decision to make, to be honest. But looking at it, if we can break the weekly level here, we could be in for a flush down today. Well, not to, well, so we can be today. It's 125% of ADR. If that Canadian dollar takes off this afternoon after the press conference, the US dollar will probably go with it. So there is potential for a lot more strength coming through this afternoon in that as well. US dollar CAD's just hit ADR. There goes to strengthen that US. So I will be getting in short on the US dollar today, if it continues. So we're back up to range highs. You can see this has been the best thing. I wish I'd have quadrupled my risk on the US dollar CAD this month or in the last month, and literally just traded nothing but it. It's an absolute. It's the simplest thing in the world to trade at the moment. It is the most beautiful range. Every single RSI extension has literally just gone, pay me, pay me, pay me, pay me, pay me. Just that's all it's doing. So I'll be getting in short up here because I'm pretty sure there's going to be some bad news on the US coming soon, and it'll be back down there. Failing that, you've got a monthly high and a monthly high to scale in. If it does decide to continue to rally. Euro CAD 125 ADR. Canadian dollar still rallying. So we are New Zealand CAD. We're inside bar at the moment. We've got 44 minutes left, obviously, on this hourly candle, but just made new highs on the pound, and euros just made new highs. Aussie not going anywhere at the moment, but certainly very bullish. So weak CAD. My P&L on the RSI2 account has flipped from +2.5 to -7 today, and now it's back up at 3. Shows you how much news events impact your P&L, but make absolutely no difference. It's gone. It's not done anything. It's just gone. Holy crap! Holy crap! Back to where we started. Sums up the market at the moment, doesn't it? Anybody got any other pairs they want to look at or anything else they want to discuss? Because at the moment, there's nothing really much else to look at today. As I said, there's no point in doing any analysis on any pairs because until we get that press conference out of the way, we're not going to have any forward guidance on the CAD. There's a possibility that the Bank of Canada don't have any forward guidance because they will possibly follow the Fed line and say, we will be data driven. So we will be waiting for the next CPI figure. If the next CPI figure comes out as a negative, we will be dropping. If it comes out as a positive, we will be sticking. If that is the case, we know that we've just got to wait for the next CPI figure. And there will be no forward guidance until that's, or no market direction really, until that CPI number comes out. So we'll wait and see what they say. But they do often say very much the same as the Fed, which is why we don't get any movement, because they are literally waiting for those CPI numbers. And the CPI number at the moment, it loads, is in a fairly decent spot. So it's so high at the moment, and that is so low, and the same as the euro. Yeah. These guys have really got to start moving these down if this drops. So if CPI numbers are coming out as a negative, we could see 0.5% drops on these two, because they do not want to go too far below that 2%, as the Swiss have done, because then it all starts going the other way. You want to keep it stable at 2%, which keeps the economy growing, keeps people employed, keeps everything happy. So it's quite an important press conference this afternoon, in the same respect that Lagarde is going to be very important, what she says tomorrow afternoon as well. But we won't get anything different to that. No reason to do anything different to that. So tomorrow, when that is out of the way, market will have an idea what's happening with the CAD, an idea what's happening with the euro, and if this unemployment rate does anything different to forecast tomorrow, they will know what to do with the US. So Friday afternoon really is where I think it's probably all going to start to kick off this week. We need all this news out of the way, and then the market will know what to do for the next few weeks. So it's going to be a tricky week this week. Knew it was going to be a tricky week, because it always is with interest rates at the moment, because they're not doing anything with them. Thanks for the £5 euro, Ryan. Why did I say euro? Thanks for the £5, Ryan. Very much appreciated. Very nice. Look at me, I'm getting all my tips today. It's good, isn't it? It's Wednesday. We should have Wednesday tip day, shouldn't we? I don't really need the tips though, guys, so you don't have to. Don't feel you have to. I like doing this. I don't have to do it to get paid. I get my Google statement every month, and of what I earn out of my YouTube revenue, and sometimes I can pay for a meal. It's that big. You see all these YouTubers and TikTokers earning hundreds of thousands a year. I don't know how they do that. Certainly not on 48 viewers. I'm not in it for the money. In your opinion, is it wise to short US dollar CAD right now? Couldn't it just take off without pulling back? Short it. I don't know. You can see the limit orders triggering at the moment. So, this is what I mean. This US dollar, there is just no interest in it at the minute. It's not bullish. It's not bearish. It's just got no volume. So it's kind of, we had this scenario with the euro as we were coming out of COVID, where the euro was completely flat, completely dead. So the euro was moving opposite to every other currency. So when every other currency had some news, the euro would go the opposite direction. So if you were trading euro, US dollar, and all of a sudden the US dollar had positive news, it would collapse. If the US dollar had negative news, it would pump. The US dollar is in the same boat as the euro was when we were just coming out of COVID, in the fact that they will not tell us when they're going to change interest rates. They keep changing their mind every few weeks on when they're going to change interest rates, or if they're going to change interest rates. So the market is sitting there not wanting to put money into it, not wanting to take money out of it. They're holding it because they don't know what to do with it. So if the Canadian dollar takes off this afternoon, yes. If the Canadian dollar crashes this afternoon, no. There's no one on the planet that can tell you whether to short this now. And if you do, the odds are it will either go your way and you will take profit this afternoon or tomorrow, or it will go against you and you will scale in and wait for the next pullback from here or here. I don't know. And this is why I trade the way that I trade, because I don't know which way it's going. No one does. It's all driven by fundamentals and market movement. You don't know what the fundamentals are going to be before they're released, and you don't know when the market is going to make a move. So there's nobody that can tell you what to do. There's no system or strategy that is going to be correct. It will either work or it won't. And if it doesn't, it's how you manage what happens afterwards. That's how you make your money. Somebody asked in the Telegram group today. I'm just banning somebody from the Telegram group who's pumping crap. Yeah, somebody asked in the Telegram group, looking for a sort of higher strike rate strategy. Is it better to use 175% of RSI, or is it better to use 175% of ADR, or is it better to use like 80 RSI, etc., etc.? What's the highest probability? The indicator that signals a condition is literally signaling a condition. The signal indicator that enters the market is telling you there's a signal to enter the market. That has nothing to do with making money. Yeah. So if you get in on that RSI extension, it is, when you press that button, either going to do that or that. If you get in at 70, 80, 90, or 95, the odds are the same, 50-50. Yeah. It will either go like that or it will go like that and take off in the wrong direction. Yeah. It's whether it goes down and you take the money is what makes it profitable, or whether it goes up and you scale in and wait for the right drop to make your money is how you make money. Yeah. That has got nothing to do with it. And the market reversal alert or the RSI cross or whatever signal you use to get in has got nothing to do with making money. Making money is about taking profit when it's available to you, or managing your position when you're in drawdown. That's it. So if you short it now on that and you're right, you get out down here. If you're wrong, you enter again as many times as you need to up to there, and then you get out. One or t'other. I've never used an EA before. Would the SIH be a good place to start? CF, the PTEA. Position Trader EA. I also can only intermittently access charts. SIH is a scalping strategy. So if you're trading SIH, it's going to trade for you and manage it for you. But I personally would want to do a little bit of manual intervention. You can see here, look, on today's SIH, we've got hedged. If it's a clean break, it's not a problem. If you get hedged, you have to kind of look at where the market is and possibly going to decide where to get out. So you can see here, yeah, this resistance was a spot on area for me to take profit on the long, expecting a bounce. It didn't bounce, it rallied. So I added a long position. Yeah. And then it pushed up into that propulsion gap and started coming down. So I took the long off and I was ready to hedge it again, but it came down. So I got out the hedge. But I made that decision. Yeah. The EA will only automate the entry and automated exit for you, but whether that's the right thing to do based on what you can see on the chart is up to you. So there's a little bit more complex SIH. Everybody wants everything to run on full automation. I don't think you can. But position trading EA, or the position trader EA, you can run that on full auto. But if you, and it's perfect. So position trading is much better if you can't spend time in front of the charts. This is a hedging, a scalping strategy. So this is the sort of thing you watch on a 5-minute chart. If you're trading anything on hourly charts or above, you can literally trade it by looking at it once or twice a day. Because if you look at hourly price movement, yeah, and how far it realistically goes, these are hourly candles, yeah? Look how far that's gone in that 8-10 hours or whatever. Nowhere. Then it popped up. Then it sat around for another 12 hours. And it popped down for 3 hours and then pulled back 50% of it, yeah? Then it collapsed and undid the entire move. So if you only check the charts there and you only check the charts there, you know, it's a much better way to trade. This is why most traders trade hourly charts and above, because if you're trading 5-minute, you are literally trading algorithmic chop, and it is totally random. The market is random anyway, but that is super random. Everything that happens down here, the edge of this strategy is momentum at the open. If you don't get momentum at the open, the strategy doesn't work. But you won't know if you're going to get momentum at the open until the open. Yeah, so you're better off trading something like the position trader EA and just using H1M5 mean reversion strategy, or using ADR extensions, and just go with big ones. Yeah. If you work all day and you can only check your charts periodically, use 4-hour RSI extensions above 80 or below 20. Yeah. Yeah. You've only had 2 trades there this year, but it's 100% strike rate and you only took 2 entries on each. Yeah. You got 28 Forex pairs to trade, unless at the moment I wouldn't bother with the yens, but and really the Swissies either. But you know, so you're better off using Position Trader EA. And obviously it's got to be on every day, all day. So you need a VPS to run it on, which is just a computer, basically. Do you think yen? Do you think JPY have enough ammo to fire another intervention? No idea. Don't know. I don't. Basically, they've all the bond purchases they expired there, right? Since then, they've scaled back bond purchasing. So think of it like loading a cannon. Yeah, this cannon was fully loaded, right? They shot it all. They've reloaded 50% of it. The next shot is not going to be anywhere near as big as that. So the question is, if they can shoot at half the power, is the market going to pay any attention to it or just run them over? Battle lines, isn't it? The thing they have going for them is if the US dollar pushes too far in that direction, the US won't be able to get stuff from Japan because Japan just will not sell it. Businesses will not do the transaction because they will just go bankrupt. So something's got to give. And it came out after this intervention that the US and Japanese were talking to each other about what was going to happen and when, which is understandable because it was going to have an impact on the US dollar. So they are talking, and obviously it's in the US's interest to do business with Japan. So if it continues to do that, it's great for the US, but business-wise, it's not good for the US. So I really don't know. And this is my quandary with the yen at the moment. This is all driven by the US dollar yen. Look at the other yen pairs and you will see how weak that yen is. Yeah. This is the intervention. Totally rolled over. Yeah. Pound yen, totally undone. Euro yen, 90% undone. Swiss yen made new highs today. CAD yen, same as the US, gets held. Aussie, undone. Yeah. So this yen move, this yen has not changed. The yen is as weak as it was when it did that intervention. Look at it. Here, look. Yeah. It's not stopping. I don't know. They certainly haven't got enough of that left. But, you know, yesterday's move was the first ADR move we've seen on the yen since the intervention, and it was a hell of a move. Yeah, that move yesterday on that yen, we got 200 ADR plus, 225 ADR plus moves across the board, all yens. Absolutely massive. So the question really should be, is this the market buying the yen back up? Or is it a profit take on a new leg of weakness? Can't answer that because I don't know. I'm not an economist. Yeah, I have no degrees in anything to do with anything. I don't understand it enough to know what it's going to do, which is why I'm steering clear, because I have no clue. And this is a long-term proposition. Yeah. So you're going to be holding this thing. My every bone in my body is telling me to short it, because that's what I do. I mean revert. And I cannot go long on something that has been driving like that because it's got to come down at some point, in theory. But I don't know if the economics allow it. So therefore, I steer clear. Yeah. You know, this thing's been on a trend, but look at it. Is this a rounding top going in? And if so, why is it taking so long? You look at it and you think, yeah, it's certainly slowed down. And then you look at it and go, well, actually, that's speeded up. Yeah, since February, this thing's taken off harder and faster than it ever has. New Zealand not stopping. I don't know. I'm not playing with it anymore. Afternoon, Abdi. Easy. I had an opportunity to exit my yens yesterday with decent profit, but it looked like there was so much space to the downside. It's hard to tell if I'm being greedy or too scared. If you had a chance to exit yesterday, I would have got out because it would have been costing you a load of money in swaps, wouldn't it? Basically, one of the things which people have trouble with trading, everybody, not me included, yeah, is the fear and greed thing, yeah. So identifying when a trade isn't working, yeah. So people, a lot of the time with position trading, they assume it's about just waiting. You will be right at some point, and virtually all the time you will be right, but you're not always going to be right. So when that short RSI extension there triggered, it worked. You were right. When that RSI short triggered, it failed. You've got to do something about it. You can't just sit there and hold it and hope for the rest of the year that it's going to come down. Yeah. So when that thing accumulated and then shot off, that trade was wrong. Yeah. So you've got to start to get out of the position. And if you get, after a trade, let's say, for example, you got in here on the 4 hour, if it goes sideways for a week, yeah, and the RSI comes back down and re-hits the top there, that is wrong. That trade condition and signal is invalid. The trade is no longer working. Get out. Break even. Just exit. The greed part of you says, hold it. Yeah, the fear part of you should be saying, oof, that was lucky. But the greed part will always take over the fear because it's a human nature. It's human to want, excellent, this is working. I'm going to hold this. But what if it's that? My brain now says, oof, I was lucky to get out of that with, rather than, holy crap, this is going to turn into the payday of all time. Yeah, you've got to reprogram your brain to think, exit as fast as you can. I'm in 0.25% profit on something. I'm taking it because I've made 0.25%. I'm not hoping for 2%. You've got to kind of reel back the expectations, but you never know. Yeah, and equally, as I say in the bootcamp, yeah, when something goes your way and it starts to pull back and you take the profit there and it goes like that, you get cross when you miss all of that profit. But you forget about all of that profit that you've just made. All you focus on is the bit you missed, which you shouldn't do because you didn't have that. If that was in your plan to go from there to there, why did you get out there? If it was in your plan to get out there, excellent. That's why my targets are always at the closest possible propulsion gap. Yeah. So if I'm shorting this now, my target is here. Yeah. If it collapses out the bottom, brilliant. If that trade is worth doing for me, it's doing. I'm just trying to get something out the market. I'm not trying to get that all the way down to the bottom where it comes back. I'm trying to pick something out of this move that we're in. That's all. Just extract some money. And if you're wrong, extract some money at a later period. It's hard to do, obviously, which is why it's a hard job. Have you experimented with the RSI exiting the OB or OS as an entry? Not if it's not in profit, no. On Forex Station, the programmer Kavak made a nice free MTF RSI called RSI 2 levels. No, I am. Afternoon, late to the party. Excellent, Mumo. Welcome. You are late. Do you ever steer clear of trading the mean reversion of a move caused by an interest rate announcement? Yeah. Which is why I pay attention to the this is all I do all day. Look at the fundamentals because this is the only thing that moves the market. Yeah. Well, I'm short only on the euro. I'm not trading long on any euro pair at the moment because the interest rate is coming out tomorrow and I'm expecting it to drop. So I'm short only. In fact, I'm not in anything at the moment because it hasn't pulled back. So I'm in nothing. Oh no, I'm in euro US dollar short. That's the only euro I've got on at the moment. But I'm not taking any longs. You see, short did not take that because fundamentally this thing should be coming down. The Canadian dollar also, I'm the wrong side of it, but I got into this before they announced the rate drop. I've been in this for weeks. Nothing I can do about it because it's just stuck, just hemorrhaging on it. And I will be getting out of more of it after the press conference if they go further. So I'll give it probably to 175 ADR today, and then I'll cut it and I'll just take the hit. It's going to be about a 10% loss, but I've got to take it. I can't leave it. Can't just sit there and go, oh, fingers crossed. Fingers crossed does not trump interest rate drops. Got to get out. Switch bias. So I'll switch all EAs to long New Zealand CAD. Long New Zealand CAD. So all CAD pairs, I will be going short on the Canadian dollar. But I've got exposure, as you can see, too much exposure on the CAD at the minute. So it's hurting. It's one of them things. It's one of the hardest times to trade is interest rate changes. And I knew it was going to be a hard quarter because we've sat there after an interest rate rally for 12 months waiting for them to do this, and they just bring it out of nowhere. Suddenly it's like, bang. If you're the wrong way on it at that point, it's hard to cut it. But equally, we could have completely the opposite move. This afternoon, yeah. So the Bank of Canada could come out and say, here's your 0.25%. Don't expect another one for 3 months. Canadian dollar will go through the roof because the market won't be expecting it. So got to pay attention to the news. Watch the feed as the press conference is happening. Which is now. Doesn't seem to be anything being said. Oh yeah, Backlum is talking. He obviously hasn't said anything yet. Look at that. It's been going on for 10 minutes. Nothing red's come out. Still got a full glass of water, so it'll be a while. Anyway, so yeah, so when that's out of the way, we'll get some movement. Just one of the eternal struggles of trading, trying to decide whether you're being scared or greedy when you get into profit. Yeah. It's the hardest part. And this is why strategies are so hard to execute, because everything you do in backtesting is based on what you have experienced and seen happen in the market. And there will be a variable, yeah? When you go long on something and you do a back test, you will do a test saying, I want to test 1R, 2R, 3R, 4R, 5R. They will all work. Which one do you take? You've no idea which one this time is the right one to go for. That's your greed. Yeah. So there is no absolute. Everything is discretionary in trading, which is why all EAs out there will never work long term unless they are going for very, very small profits, in which case then they will work, because as a definition of market movement, it will move up and down. If you go for small profits, you will hit profits. Yeah. The back testing I'm doing at the moment on RSI2 strategy, I've got an 83% strike rate. Fantastic. It's just phenomenal. And it's working brilliantly, but it gets out at the end of the day, every day, regardless. If it's got $1 profit or $1,000 profit, it gets out because I want to get out and win money. That's it. But it could also make a 5R. So when I get out, the next day it collapsed by 175%. You've got to shut off and go, oh, well, I'll get in long in a minute. It's just, there is no way of knowing where it's going to go, which is why I keep saying, every candlestick you look at, this big candlestick going up here is like everyone's going, oh, look, it's a long. Is it? Let's wait until the next 4-hour candle's in. Because just because it's gone up here, that has got no bearing whatsoever on what's going to happen next. Yeah. Went down there, then it went up, then it went up, then it went down a bit, then it went up. Then it's just gone sideways for ages, isn't it? Because one candlestick goes in one direction means nothing. Look at that massive bull move. Yeah. Everyone went, oh, look, it's a lovely long. Whoops. No. Hey, look, massive bear move. Everybody short it. Whoops. Hey, look, massive spike up. Everybody go long. Got nothing to do with the next candle, that. You have no way of knowing which way it's going to go, and you've no way of knowing how far it's going to go. You can use propulsion gaps as targets to the downside. It might go there, it might go there, it might go there, it might go there, and it might go there. Conservative, aggressive, and everything in between. There is no way of knowing where it's going. You just have to take money, some of it, when you can, and hope that you get more than you don't. I guess if you're cutting New Zealand dollar CAD, I'll give it 24 hours. Exactly, yeah. I can guarantee you, if I do cut it this afternoon, if it drives this afternoon, tomorrow it will do 150% ADR drop. Every time. Every bloody time. Look at Aussie New Zealand. Yeah. I got in. I held. I got out. It collapsed. Look at US dollar yen. I got in. I held. I got out. It collapsed. I'm not even going to show you New Zealand dollar CAD, but you know exactly what to do. You've just got to cut it at some point. I have just had the unluckiest, so far, I've had the unluckiest year ever in the fact that I have just got into so many squeezes so fast, and every single one has done exactly what I said it was going to do. Yeah, my target on the Aussie New Zealand, I said, and you can go back and watch the live streams. That was the target. I said, that's where it's coming to. 2 weeks ago, we hit it. 3 weeks after I got out. Always does. Always, always, always does. Your job is to scale in with the right size that you can hold the position until the move. That's the problem. This is why we call it a squeeze. The market is squeezing the shorts. Yeah. Until there are no shorts left. And when all the shorts have gone, they have no choice because there's nobody left to do it. They cannot buy from someone if there isn't someone there. Because the short squeeze is finished and all the shorts have gone, you won, they turn around and they flip. That's how the market works. That's why these guys have taken profit, because they had no choice. There's nobody left. Just, you know, sometimes it just goes too far, too long. The squeezes I'm normally in are 4 to 6 weeks. Typical squeeze. This year so far, we've had 4 squeezes which have gone over 2 months and have moved over 10 ADR. And there's just nothing you can do about it. It's just a hideous, hideous year so far. But it will change. But you know, this is the quarter of interest rates we've just had. They didn't happen. They put them back again. They put them back again. They put them back again. And literally a fundamental shift every month at the moment. It's just a very, very hard situation, which is, again, why I'm looking at RSI 2 and loving it at the minute. Brilliant. Easy to stop loss, though, so I hate it. But I love it at the same time. That is really difficult. It is very difficult, but you have to take it. Not a lot you can do about it when it does that. But you see it, though. But look, I mean, where I got out of that, yeah, the higher that day literally got broken 2 days later. They pushed half an ADR beyond the higher day. And that was the interest rate change on the New Zealand dollar. Yeah. That was a CPI. Sorry, that was a CPI, I think, wasn't it? That was the interest rate change on the New Zealand dollar. Or rather not. This is what I mean. Nonsensical. There was no reason for either of those moves. because the interest rate did not change. In the same way that there was no reason for that move because the interest rate did not change. This is what we're getting. No fundamental shift. I'll tell you what, let's just rally it for 2 months. Can't do anything with it. It's just not operating in the same way, is it? It's backfiring. But it will get, or hopefully it will get back to normal. Can you show your trade manager for the RSI strategy? My trade manager, yeah, it's hideous. 14% down this month so far. Well, this week, just hemorrhaging at the minute on the New Zealand. So yeah, just and that's what I mean. I will be out of the New Zealand dollar CAD this afternoon with another 4%. So big loss. Nothing you can do about it at the minute. As you can see, it's just parabolic. You can't get out of a parabolic move when there's a shift in. So here, 5 weeks ago, was the entry short. We did nothing for a week and a half. We had a news event. We did nothing then for another week. We had a news event. We've done nothing for 2 weeks. Interest rates have changed. Back there, they weren't changing interest rates. Here, they decided, do you know what? We'll drop it by a quarter. What can you do? Nothing you can do. We are at the will of the interest rates at the moment. In the same way as when the interest rate rallies happened, I made a fortune. The interest rate drops. I'm just getting it wrong at the moment. So nothing you can do with it. Hideous. Personally, also cutting New Zealand dollar pairs from the portfolio. You can't cut New Zealand dollar pairs from your portfolio. Don't do that. That's not going to help. If you cut everything that you get squeezed on, you won't have anything left in a year because you will get squeezed on everything. Every currency will squeeze you at some point. There is nothing that doesn't squeeze you. All of my back testing, that's Aussie US. All of my back testing that I'm doing at the moment, I'm just thinking New Zealand I've just done the Aussie New Zealand. Return on drawdown on the Aussie New Zealand strategy is 7.4. Yeah, 7 times more profit than drawdown. Yeah, on Aussie New Zealand. I've been squeezed on Aussie New Zealand twice, and it's hurt me twice. Yet my back testing here over 4 years is showing a 7-to-1 R. Can't drop New Zealand because you've had a bad experience with it. Look at how many times you've made money on it. This is why it's important to have a long-term view of trading. Yeah, it's not about a week, a month, a quarter. It's about a year. You are not going to be able to survive constantly every single month making a profit. It doesn't work that way. Over a period of a year, if you analyze your P&L, you will find, like with the yens, I lost 11% and made 13 back on the US dollar yen. Yeah, I got the intervention move right. Gamble, luck, brilliant. Got the money back from it. But I'm not trading the yen at the moment. But I'm not trading the yen ever again. I'm just not trading it at the moment until I can understand what the fundamentals on it are. Looking at my P&L over the last couple of years, I've made more money out of the yen than I have out the US dollar. I'm not going to drop the yen because it's very, very profitable. Just because this quarter has been hideous on the yen doesn't mean I can't trade the yen anymore. Gold, on the other hand, I've never made money on it. Oil, I had a good go at it last year. It kicked me in the arse again. Commodities, I'm just not good at commodities, so I don't trade them. So you can identify things that don't work, but just because something isn't moving right at a point, if you drop that, the next thing you'll get squeezed on is the Swiss franc. You'll drop the Swiss franc. And then all of a sudden, the Aussie will kick you in the arse twice in a year, and you'll go, I'm not trading the Aussie anymore. You're only left with the pound, the euro, and the US dollar. 3 majors. Can't make money on those 3. What if they go sideways for a year? Yeah, you can't do it. You've got to trade what moves. And what is moving at the moment is or will be, the Canadian dollar and the euro. But I've just done an optimization on this Aussie US. 16,000 tests. 13,500 variations of the strategy out of 16,000 profitable. Yeah. You know, so you've got to back test and do this type of testing to give yourself confidence in a strategy across all instruments. And it's not about a single instrument, it's about a portfolio. Yeah. So where you will lose money big occasionally on an individual instrument, you will make that money back over a period of a month or two. But long term, you're either going to have a fantastic year or a mediocre year. And this year is looking like a mediocre year at the moment. But when interest rates start to drop, it will become a little bit nicer. Let me just move this over there. Yeah, 13,400 variations profitable there. That's fantastic. This is the RSI2 strategy that I'm testing in much more detail with another EA basically that I've built just to test it on its own and get the data out. But yeah, so that there is that Aussie dollar US dollar. So the I've only tested at the moment Aussie CAD, Aussie Swiss, Aussie Yen, Aussie New Zealand, Aussie US, which I've just done. Yeah. So return on drawdown highest 10.3, Aussie Swiss 4.96, Aussie Yen 6, Yen pair 6R return over 4 years on a Yen pair. Aussie New Zealand 7.4, Aussie US 5.3. Yeah, that's return on drawdown. So on a 100K account, yeah, you're returning 5 times the drawdown you're taking. So this is taking 2%, 3%, 4%, 6%, 1% to 4% sort of stuff, 4%, 5%, 2%, 1%. I mean, the Aussie CAD, again, Canadian dollar squeezing me at the moment. The Aussie CAD has the highest return on drawdown with RSI2 strategy and the lowest drawdown, less than 2% drawdown in 4 years. Bloody brilliant, the CAD and the Aussie. New Zealand dollar CAD's kicking me in the arse at the moment. I'll test that in a minute. Let me just start the next one off, CAD Swiss. Yeah, so you can't just chuck stuff because it's having a bad day. Otherwise, you'll just run out of stuff to trade and you'll give up. You know, and it's as frustrating as it is to watch yourself get stopped out and then the market retrace. Just part of the game. Nothing you can do about it. Yeah, not going to be a good month this month. Again, I've had 2 good months and 2 bad months. We're in June. And 2 mediocres. So I'm down on the year so far at the moment. First time I've been down on the year coming into second quarter. So, great. I would like to switch to interactive brokers. Well, you can't. That's for stocks. Yeah, we did interactive brokers as a stockbroker, so it's nothing to do with what I do. But yeah, IB is if you want to be trading stocks. Doesn't this stocks and futures basically interactive brokers, and it's US based, so it's not nothing to do with CFDs. You'll find yourself very limited, and you will have to suddenly learn how to trade in tens of thousands of lots as well if you want to trade anything to do with foreign exchange on there or anything to do with currencies basically. So you have to go long 10,000 euros, not 0.1 lot. Very complicated. Good luck with it. I used to trade with interactive brokers. It was my broker when I traded stocks. They're a brilliant broker, but it's all CME direct trading. So you're trading with the Chicago Mercantile Exchange, basically. Not what I do, though. I tried to set strategy testers to run from 2020 to 2024, and every time it showed only 1 year and a half maximum. It's because your broker hasn't got data for 2020. So if you're only using your broker's data, yeah, so I'm using Tick Data Suite. If you're using your broker data, you're limited to testing what your broker will supply you. And if your broker, as most brokers are, crap at supplying data into terminals, you can only test that, which is why you use Tick Data. You have to buy it. You can't do testing for free if you want to do it properly. But you can, if you want to do a short-term test over the last 6 months to a year, that's not a problem. But that's not enough. You've got to test over a decade, really, if you want confidence in a strategy. So the way that I run my testing is I run a 4-year test to get data, to find out if it's worth following up with, whether it's robust, what roughly is the best thing to do with the strategy. Then I take a number of sets out of that, and then I'll run that over a period that hasn't been seen out of sample data, which is usually another 4 to 6 years. So I do a decade's worth of testing over 2 periods. So one is used for analysis and optimization. The other one is used for verification of that strategy. So if you get something you find works, you're basically curve fitting it to that set of data. So if you take that strategy and you run it over data that the EA has never seen before, you know that it's robust. If you run it over another set of data, older data, then it's even more robust. Aussie New Zealand H1 RSI extension. Still coming down. See, this is sod's law, isn't it? Everything I'm getting out of, I've got out of in a loss this year. But I wouldn't have held it to that, obviously. Nowhere near. Right, I'm going to leave it there today. I'll be back tomorrow. So press conference is going on. Macklem is saying nothing of interest at the moment. As you can see, there's a lot of stuff coming out, but there's nothing coming out of this that is bullish or bearish at the moment. And as you can see, we're getting pulled back on again. So market is totally undoing the move at the moment. So we'll see if we get a continuation on it. But at the minute, Macklem, it sounds like he's being pretty bullish about the CAD, i.e. there's not an awful lot of reason to keep dropping rates at the moment. Therefore, we will just get this completely undone. And then there is the possibility of the market starting to undo what it's factored in, which is where we start to get the pullback. And sod's law, it'll be today, because I got out of the majority of my position. So we'll see what happens. But I'm just going to look at the Euro CAD as well. So we're not making any new highs at the moment, but equally we haven't made an undoing of the move so far. So we'll see what happens with that. So tomorrow we've got the big one, which is the Euro. So 1:15. So I'm going to be on at 1 o'clock tomorrow. It's the European parliamentary elections tomorrow as well. Day 1. How many days does that run over? 4. Okay, so Sunday they announced the European... Right, that's good timing, isn't it? Let's change the interest rates as we have an election. I'm pretty sure that's what's going to happen with the UK as well. We're doing it in July when we have an election. But yeah, so tomorrow afternoon is the big one. That's with the 4.25 interest rate drop on the euro. So this is obviously the second largest currency on the planet. So behind the US, this is the one that has the most impact. So there's a good chance tomorrow we might see some serious movement across everywhere. Lagarde is much more open than all the other banks about what they're going to do forward monetary policy. They've already said they are planning to freeze. So 4.25 is the first drop. They are planning to skip a month at the moment. So tomorrow, when we get that, the market shouldn't be too shocked. What they will want is, are you definitely going to freeze for another month? If she comes out and says it's coming down faster than expected, we'll probably drop it. That euro is going through the floor. So there's a chance of a big move off of that tomorrow. And obviously everything will get pulled out of other currencies and pumped into the euro. So I'm short only euro, although I haven't really got any exposure on at the moment, unfortunately, apart from that €1 US, which I'm targeting at 175 ADR. But tomorrow, in fact, I might as well move it now. I'll be going for, you know, a good couple of hundred ADR out of that. So I need to get some money back. But anyway, so yeah, we'll see what happens with the euro. But that US dollar strength today has obviously helped as well. So could be a big one tomorrow. We'll see what happens. Right, so I'll be back tomorrow afternoon, 1 o'clock tomorrow. And then we'll see what happens with the euro. Keep your eyes peeled on Financial Juice for the next, well, it's half an hour in. Yeah, I mean, keep your eyes peeled on this for the next 15 minutes. So when the press conference is over, he takes questions from the floor. That's when we tend to get the confirmation of what's going on. So once that's over, the market knows what to do. The market will then either decide, yep, nope, or no idea. And if it's that, we're literally going nowhere. And we've seen this before on interest rates when we were coming back up again, market not paying any attention. So is that over? What's he laughing at? Somebody just told a banking joke. I think he's taking a question. So I just thought they'd sat there and gone for no reason. So they are still taking questions. So yeah, just keep your eyes peeled on that, and then you'll probably get a move started at some point. But at the moment, he hasn't said anything. So, all right, have a good one. I'll be back tomorrow afternoon. I'll be in Telegram, Discord if you need me for anything else. Other than that, have a good afternoon, and I'll see you guys tomorrow.